I'm Adrian Fritz, Chief Investment Strategist at 21 Shares, and you're watching Taking Stock.
Two minutes ago here on the trading floor of the New York Stock Exchange until the iconic closing bell, and my finest Jerome Powell purple tie on this Fed day. Welcome to the broadcast. You're watching Taking Stock. I'm J.D. Durkin. Joining me, the great Einstein of Wall Street.
Yes, sir.
Jerome, a lot of headlines here. Powell saying above all else.
As you look at the chart, it was all headline driven.
Hold the mic. Tell me what you're seeing on price action today into the close.
Look, from 2 o'clock on, everything that he said, everybody was holding on to each line that he had. And every time it was something positive, it rallied up. Every time it was something negative, it came out. I mean, there was a dissent for the first time since 1992 that 4 governors dissented, right, in this decision. That hasn't happened in decades, right? That was a big deal. Otherwise, he said the economy was not doing bad. Obviously, energy was the biggest inflation factor in the whole game. So it was literally one bit of positive news, one bit of negative news. I mean, this was his last hurrah, right?
Yep.
And he stayed on for a while, and he gave it the best shot he had. And I'm a fan. He's navigated us through the last 6 years, and the S&P's up 145% in through his eyes, and that's a big deal.
Yeah, he did say developments in the Middle East are contributing to a high level of uncertainty about the overall economic outlook. That much more sets the stage for Kevin Warsh, who will be coming in before long, presumably. But the big headline, though, he'll stay on as Fed governor, Jerome Powell. For now, he's going to continue to be a voting member of the FOMC.
Which is amazing.
We'll see what happens here. Thank you for being here for the context. Look at that, setting the stage. There you go. The team from Gold Royalty here now. Time to do the belt. Close enough. Two 100s, flat. All right, and bringing about a close to the auction here on Wall Street for today's Fed Day. Look at this tape. The S&P 500 well off its session lows, will finish down 0.04%. The Dow down about 0.6. The New York Stock Exchange Composite Index in negative territory. Let's call it 0.4. The small caps down 0.6 as well. Energy and tech, your outperformers in the S&P 500. Your sector laggards, utilities, healthcare, and materials. As for the Mag 7, mixed results on the street today. Amazon shares up 1%, Nvidia shares down 2%, Visa, Cisco, and Chevron, your big winners in the Dow 30 component. Let's bring in our good friend Ted Rossman. He is now principal analyst at Bankrate, a brand new title, but a name you know and love. Thanks for being here as always.
Good to be here, thank you.
So, Einstein and I were just talking, there's a lot of headlines to go through for the Fed, the commentary, no dot plot for the FOMC today, but the fact that Jerome Powell is essentially saying, I'm not going anywhere, I may not be chairman, but I'm going to have a voting seat here for the FOMC. What'd you follow for Fed Day, Ted?
That was big news. I didn't think he was going to give us too much on his future today, but that will be notable. I think really the biggest takeaway from the Fed is they're in wait-and-see mode, and many believe that will continue throughout the rest of the year. According to Fed Futures, CME FedWatch has about a 90% chance that rates are unchanged by the end of the year. Actually, a slightly greater chance they go up rather than down. That was the main explanation for 3 of the 4 dissents today. Those Fed officials don't necessarily want us to assume that the next move is going to be downward.
Yeah, that's right. You're talking, obviously, Stephen Myron, first of all, he's the first of the 4 dissenters. Voting for a cut, no big surprise. That's the president's pick. Then you got regional Fed presidents Hammack of Cleveland, Kashgari of Minneapolis, Lori Logan of Dallas. They're trying to communicate something a little bit different. What does all of that mean, presumably, for incoming Fed Chairman Kevin Warsh?
Well, he's definitely not going to have a slam dunk to lower rates. I know that's what the president wants, but we have to remember, this is a 12-member committee. They take their job seriously. The Fed wants to be independent. I mean, how many times was independence mentioned during the press conference today? What we need to get used to here as consumers and as investors is perhaps higher for longer. That's having effects on the housing market, where the average 30-year fixed mortgage rate is around 6.4%. The average credit card rate is still close to 20%. Really across the financial spectrum, higher for longer could be the mandate here. A lot of that comes back to the war impacts too. I do feel like mortgage rates are about a 0.5 point higher than they would have been if we didn't have the inflation impacts of the war.
Can you tell me a bit more about what you've tracked specifically for the 30-year fixed rate mortgage? That's one of the top questions I get from people who say, great, interest rates are coming down. What does that mean for my mortgage? When can I expect that alleviation of pressure? How do you approach that question?
6% is a psychological tipping point, and we got to around 6% back in February. Some sources actually had it just below 6 for the first time in 3.5 years. Now we're closer to 6.5. That half a point is meaningful. It has slowed the spring home buying season. It will likely slow the market through the summer just because a lot of existing owners have rates in the 3s or 4s, and they're reluctant to put their homes on the market. The first-time buyer is price sensitive. It makes a difference at 5.5 versus 6 versus 6.5. Now, you can still get rates in the mid to upper 5s if you have really good credit, if you shop around aggressively. It's very important to do that.
I want to get your take on a lot of big tech earnings. Even if it weren't Powell's last day and an FOMC, a Fed day, it's a huge day for tech earnings. Microsoft, Amazon, Meta, Alphabet. We get Apple tomorrow. We're tracking CapEx spend. We're tracking strength of the consumer despite the economic headwinds. What are you looking for as some of the biggest, most important names that trade anywhere in the world are going to tell us what's under the hood in the next few hours?
Right, clearly these big tech names are going to have a big impact on the overall market. I've been struck so far this season that earnings have been very positive. The banks were very positive, very upbeat about consumer spending. Jerome Powell talked about it today too. The consumer business fixed investment, he noted, was strong. I do feel like whether it's AI or whether it's other things, businesses are spending, consumers are spending too, and that's surprising. These higher gas prices, they've dented the lower 20% or so of the income distribution, but not everybody else. People are still traveling, they're still going out to eat, they're buying things online and at the mall. Don't underestimate the consumer, right?
Yeah, I feel like a lot of people are complaining about where prices are, but consumers are still spending. Before we let you go, any final catalysts you're paying attention to, you think market participants might benefit from paying a bit more attention to?
We do have PCE coming up in a few days. I mean, hard to believe that's going to fall below 3, just given all the impacts of higher oil and gas prices. We could start to see that bleed into other areas of retail and travel. That could ultimately weigh on the consumer, but again, don't underestimate the strength of this consumer spending. The job market's still in pretty good shape, and the market's still near record highs. You wouldn't have thought that a few months ago, right? With oil nearing 120.
Yeah, I think it's the first time I've seen you since we've closed above 7,000 for the S&P 500. So it's nice to have you here. A longtime friend of ours, Ted Rossman, principal analyst at Bankrate. Thanks for being here to kick things off.
You got it. Thank you.
Skylar, grab your microphone. You and I will head this way. Jeff, the biggest analyst calls that move the tape today on Wall Street. We'll start with Morgan Stanley reiterating Starbucks as an overweight rating. They say they're sticking with the stock after earnings. Starbucks up big on the day and up about 15% from the start of the year. Next up, Oppenheimer upgrading T-Mobile to outperform following earnings, calling it a deep value name. T-Mobile up on the day, but down 7% since the start of 2026. Finally, Rosenblatt upgrading Spotify to a buy rating. They say Q1 was actually better than expected, despite the miss on premium subscribers. Spotify fell 12% in yesterday's session, is down about 25% year to date. Jeff, we'll take one quick look here at one of the most important sectors, and man, oh man, is this ever the week for it. Up 0.8%. This is XLK, the technology ETF. A lot of huge names set to report. Microsoft is 10% of XLK. We get their numbers any minute. Apple is 14%. We get those numbers tomorrow. XLK has rebounded 25% off of those March 30th lows. Not the strongest performing sector year to date. We know that's been the story. It usually has been the leader in the bull market. It actually lags energy, materials, and industrials, but still up, outperforming the broader market. XLK up 9% year to date. The New York Stock Exchange's very own Kristen Schuller sat down with flagship pioneering CEO Noubar Afeyan at the Semaphore World Economy. They discussed all the ways AI is impacting the world of science. Take a look.
How are you finding that artificial intelligence is impacting your sector of healthcare?
Well, there's a way that it's affecting every sector, and it's also affecting healthcare, which is productivity, simplifying work, and making things more efficient. But then there's a unique way in which AI is affecting science, which is really a completely different territory, and that is the whole scientific method is increasingly being leveraged by AI and then leveraging of AI in the sense that we're using generative AI to come up with new hypotheses, not one at a time, but hundreds of them at a time. We're using AI to design experimental protocols that otherwise hundreds of scientists would be involved in doing. And then we're actually running experiments increasingly in automated labs and then interpreting the data. That whole wheel of science that's historically been very important as to its output, but very inefficient and slow, is becoming AI-ified, if I can call it that. And it's really a marvel to see, because we don't really know kind of where it goes. It's a little like Waymo for scientific discovery, to put it in a kind of a trivial way, but it's really potent, and we're just beginning to see the effects of that.
What does America need to do to keep its innovation edge?
Well, so many things I think have contributed to our innovation edge. I'd say first and foremost, our immigration policy has been a huge part of that, in the sense that we've attracted the best and brightest from the world, and we've been able to incent them to stay here and to contribute, and that's been a very big driver. I think that the policies that we use in terms of funding basic research that leads to some of the major breakthroughs, there's a whole continuum. People don't realize when they see a breakthrough, when some satellite gets shot up in the sky and does wonderful things, where's that come from? And the answer is a consistent investment in basic research that follows by applied research, follows by entrepreneurial research, all the way to companies that can create these products. There is a real battle going on as to whether that research is worth it and whether we should just get out of the business of funding scientific research by and large, and that's really scary in my view. Then there's competitiveness issues. You know, we're competing with China in certain sectors, particularly in biotechnology, and we definitely are feeling the effects of that, because they have a centrally planned economy that's focusing on some areas of relative advantage for them, particularly new drugs that can be developed very efficiently there. And the US biotech industry is feeling that. Now, competition is good in general because it makes you even better, but competition based on policies that are very different as to what it takes to take something into the clinic and test it in humans, or the ability to aggregate data from lots of places so you can make much better decisions. These are things that are essentially not possible in the US. We're not organized that way. So we've been advocating that there needs to be attention paid to some of the conditions for us to maintain our competitive edge. So I think that the challenges bring opportunities. The startup community that's very healthy in the US, we need to make sure we're protecting that advantage. Obviously, large companies are also competing, so how do we create the dynamics right to make sure that happens? All of that goes into competitive advantage and innovation.
What is the impact that AI is having and can potentially have when it comes to scientific methods?
Well, AI, if you think about artificial intelligence, maybe I'll start with this. You know, we've had human intelligence as the only form of intelligence since humans invented language. So one of the interesting things when you grow up, you realize that animals are supposed to be not intelligent because humans said so. That we have no idea if they're intelligent or not, but that's what we say. Now all of a sudden, in the last few years, we've made room in our lexicon for another form of intelligence. We call that artificial, it's machine intelligence. I rather call it machine intelligence. And it's a different kind of intelligence. But now that we've done that, I would say the interesting new emerging frontier is that we're going back and looking at nature and realizing that it too is all sorts of forms of intelligence. A cell in your body is a form of intelligence. Otherwise, you couldn't use immune cells to go after cancers. A virus is an intelligent entity in that it wouldn't, otherwise it can't take down hundreds of millions of people around the world with infection. So that form of intelligence we're beginning to realize can be better understood by machine intelligence than necessarily human intelligence. That's a really profound thing. I call this polyintelligence. There's multiple forms of intelligence. So AI, in my view, will be a way for us to understand more about nature and do more good with it. Of course, we have to be careful of the bad that can be done with it, but the good can be better medicines, better foods, better climate mitigation, you name it. I think we can improve a lot if we understand how nature does what it does, and that's what AI is a key to.
Noubar Afeyan, thank you so much for joining me here at the Semaphore World Economy Summit. Of course, founder and CEO of Flagship Pioneering.
Thank you so much.
Thank you.
Welcome back to the show. David Garofalo joins us now. David is the chairman and CEO of Gold Royalty Corp. Right off the Bell podium, ringing about the closing bell. It's nice to have you here. Congratulations.
Oh, thanks for having me on.
You're celebrating 5 years since listing. Talk to me first and foremost, what has changed about the company over the last 5 years?
Oh, lots. I mean, we started as a $200 million market cap when we IPO'd back in March of 2021. Today, we're $1 billion market cap. We've increased our portfolio 14-fold from 18 precious metal royalties when we IPO to over 250 royalties today, and we have exponential growth in revenue over the next 5 years from that royalty portfolio.
David, I gotta be honest, I was yesterday years old when I learned the phrase net smelter return. Talk to me about what NSR actually means. What does the model capture without cost pressure from diesel and labor?
Yeah, so basically we get paid a percentage of the gross, a fixed percentage at each of the mine sites that we own a royalty on, and we have over 250 royalties in the portfolio. So that means we don't have to worry about costs at the mine site. We're completely insulated from cost inflation. It's basically a music royalty. We get a percentage of the top line.
Wow. How valuable is the geopolitical safety right now, given 80% of your portfolio, if I'm not mistaken, between the U.S. and your home country of Canada?
It's a big deal because at the end of the day, a royalty company is a collection of contracts. Unless there's a judicial framework around the enforceability of those contracts, they're not worth anything. So it's important to be in those types of jurisdictions where they have that judicial framework. But more importantly, in Nevada, Quebec, Ontario, where 80% of our royalties are, those are some of the most geologically prospective gold districts in the world.
Your guidance points to 500% volume growth by the year 2030. What is driving those projections, and what gives you most confidence in not just where the company is today, where you most hope it is tomorrow?
Well, we have 7 cash flowing royalties. We have 14 in various stages of construction. But more importantly, have royalties on 3 of the 5 biggest producing gold mines in North America. So these are generational, foundational assets that will be producing royalties for decades to come, long after I'm gone. And that's the important element of our story. Yes, we have a lot of growth, we have a lot of optionality with over 250 royalties, but having that foundational element provides us the certainty that we'll be generating cash flow and ultimately dividends for our shareholders down the road.
Yeah, it's still relatively, all things considered, a higher interest rate world. How do you stay disciplined in the general merger and acquisitions conversation? Where are you still finding value out there for the firm?
Well, look, now that the capital markets have opened up to mining companies, in particular junior mining companies that are conducting the necessary exploration to replace depleting reserves in the industry, that means we're going to have more opportunities to provide capital to those explorers, developers, and operators to expand and optimize their mines, and that's how we get royalties.
Before I let you go, central banks are buying gold. Investors are looking for the hedges despite all the uncertainty and geopolitical issues. Are we still in a structural bull market? Still cyclical? How are you thinking about the big picture operations relative to your work?
Well, you hit the nail on the head. The central banks don't even trust the value of their fiat currencies that they're printing with reckless abandon. And so they're diversifying out of sovereign debt as quickly as possible into gold, because that's the one currency that can't be printed. And that's why gold's gone from $35 an ounce to $5,600 an ounce over the last 50 years.
Dave Garofalo, Chairman, CEO of Gold Royalty Corp. Congratulations. Well done ringing the bell today. Thanks for joining us. Nice to have you. A lot more Taking Stock coming up right after this. Welcome back. How lucky am I to say one of our favorite all-time Taking Stock guests is generous enough to return once again. Caroline Pham, Chief Legal Officer and Chief Administrative Officer at MoonPay. Thanks for joining us once again. It's great to see you.
Thank you so much. I love coming on the show.
I feel like every day I have to ask an expert the latest on the Clarity Act and what you're following out of Washington. Are we finally on the verge of mainstream bank participation in the space? And you're a longtime DC veteran. What are you looking for out of this bill?
So we are definitely having banks participating in this space. I mean, I've always said that 2026 is the year of institutional adoption. Look, banks have been working on blockchain technology since 2015, 16, 17, 18, and so right now with the regulatory clarity that's been in place at the agency level, that's created a great foundation for all the announcements since January, which is key to why we're launching MoonPay Institutional, and then of course any additional regulatory clarity is going to be very welcome.
What other advantages out of the Clarity Act eventually passing the Senate, the House, and onto the desk of the President are you most looking forward to?
So I think what everybody's just really keen to have is a coming together of the minds, and just let's all agree on what the rules of the road should be, and then let's just go build.
Today was Jerome Powell's final press conference, we believe, as chairman of the central bank. We get Kevin Warsh incoming soon. How much does Fed leadership actually change the trajectory for the broader cryptocurrency space?
So I think the Fed leadership is going to be important for digital assets because a huge use case and value add for blockchain technology is what role it plays in collateral management for our markets. So of course, previously I had worked on the tokenized collateral guidance when I was at the CFTC, and just having the information there about how we should treat this innovation, which is going to allow for real-time settlement, that's going to make a big difference. Capital rules, of course, are very important for financial institutions, so the Fed definitely has a big role to play.
You and I were talking a few minutes ago there about regulations, and I wonder how you see the different approaches in terms of stablecoin regulation and legislation in the US versus the EU. If people don't follow the differences too closely, what should they know?
So I think one of the key differences about being cognizant of for stablecoins is, look, the EU came out first with MiCA. They had a 2-year implementation period for stablecoins. Of course, the US came out with Genius Act, and the rulemaking is going to be in place, hopefully final by the end of this year. I think what we're going to see is a shift towards the U.S. approach. So it's very possible that MiCA is going to have to be amended or updated to then conform with the Genius Act approach.
Oh, that's fascinating. We'll look out for those developments and more. I want to ask you all about MoonPay's new fiat to stablecoin virtual offerings. Are stablecoins becoming more and more a bit of a checking account? How are you approaching that conversation?
Stablecoins are not a checking account, right? And I think this was really clear when you look at sort of the OCC proposed rule, where if you have something that is a lookalike checking account, a lookalike savings account, a lookalike money market fund, that's not going to be okay. But something that's a merchant rewards program, I mean, we're used to that in financial services. Think about your credit card rewards program, right? Think about the miles you earn on your credit card. Think about points that you can get, you can redeem, or cash back. All of these are really reasonable ways to think about the benefits that you could have in using stablecoins. So I think we're really just seeing a modernization of the existing financial products that we love and use every day. You know, there's another example that I was told, which I think makes so much sense. Stablecoins are almost like our modern day traveler's checks. Some of your viewers may not know about traveler's checks, but back in the day, you could travel anywhere in the world and you'd have traveler's checks, and it was denominated in US dollars, and that was good as cash, right? And so if you think about it, stablecoins are the same thing. It's a bearer instrument. That's also why it makes it so good for markets and for doing collateral management.
I am old enough to remember traveler's checks. Before I let you go, the acquisition of Israeli security firm Sodot, I hope I'm pronouncing that correctly. What does the deal say about MoonPay's increasing pivot to institutions, if that's the right way to frame it?
So I think what's really unique about MoonPay is MoonPay started from the non-custodial space, and it started from DeFi. There are a lot of people who say that DeFi is not safe and not secure, and we are proof that that's just not true. We have 30 million users in 180 countries, and when you think about that and that we do settlement in 120 different fiat currencies, we do KYC, we do transaction monitoring, we do sanction screening, and we do SARS reporting. So by taking our strength there in DeFi, for any TradFi that wants to access DeFi liquidity, but do it safely and securely, especially with all the hacks recently in the space, or people thinking about quantum computing, or people thinking about Anthropic's Mythos that was released, that is why this acquisition of Sodot was so key for us. Ido Sofer and his team have built such a great thing. They have the best-in-class secure key management used by exchanges and trading firms all over the world, eToro, Flow Traders, Flowdesk, BitGo. So we're really excited about what this means to anchor our institutional offering. We really are bringing access to cross-chain collateral mobility as well as DeFi liquidity.
And I was really excited all day and all week knowing that you were generous enough with your time to come back on the show. The great Caroline fam, please come back and see us anytime. It's nice to see you.
Thank you. Thank you so much.
A lot more Taking
Thank
Stock
you.
coming up right after this. That was really good. Thank you. Time now for a few fintech, crypto, and artificial intelligence headlines for your Wednesday afternoon. First up, the crypto majors all down. ETH, the hardest hit at this hour, down 2.2%. Next up, Google striking a deal with the Pentagon to provide AI for classified use, giving the Pentagon access to its models even as employees raise concerns about the risks of deploying artificial intelligence in warfare. And finally, Taylor Swift now taking legal steps to protect her voice as well as her likeness, filing trademarks for audio clips and images. All of this in a bid from the pop star to combat AI-generated deepfakes. Money 2020's own Scarlett Sieber is now back with a whole new edition of Jargon Translator, where she puts complicated finance terminology into everyday language that anyone can understand. Take a look.
I'm Scarlett Sieber for Money 2020, and this is Jargon Translator. Today's term explains why some companies suddenly go from doing okay to printing that money. This term is operating leverage. Operating leverage describes what happens when revenue keeps growing, but costs don't grow nearly as fast. In the beginning, companies hire, build, invest, spend a lot. Costs are high relative to revenue. But once the product, platform, or infrastructure is built, something magical can happen. Each new dollar of revenue costs less to generate than the last one. That, my friends, is operating leverage. Software companies are the classic examples. Building the product, that's expensive. Selling it in the 10,000th time, that's a lot cheaper. When operating leverage kicks in, margins expand fast. Profitability accelerates. Suddenly, scale starts working for you instead of against you. But, and this is important, operating leverage cuts both ways. If revenue drops, fixed costs don't magically disappear. Leverage amplifies gains and losses. That's why investors love it and fear it at the same time. Great operating leverage means your business model scales efficiently. Bad operating leverage means growth hides structural problems. Operating leverage is why timing matters so much. Growing too fast without it, you burn cash. Hit it at the right moment and the economics flip almost overnight. Operating leverage is the moment a business stops pushing the car and starts coasting down the hill. And that is your jargon translated. If there's a finance term you keep hearing about and want the real story on, put it in the comments and it might just make the cut. In the meantime, back over to you.
Tomorrow here on Wall Street, quarterly results in the morning from Eli Lilly, Caterpillar, and MasterCard. And this time tomorrow after the bell, the latest results from Apple, SanDisk, and Reddit. That's going to do it on this Fed Day edition of Taking Stock. Have a good night. We'll see you again tomorrow. That was good. I liked it.